Welcome to Takeaways. My name is Jordan Brooks, Director of Market Analytics with ALN Apartment Data, and this month's newsletter was titled Strong Demand Masks Stress in Existing Multifamily Stock. The newsletter was in part a look at where the industry stands after the first quarter of this year, and there was a particular focus, obviously based on that title, around some of the performance under the top line numbers those top line numbers were quite positive in many respects. So there were two topics I'd like to briefly touch on today that were only kind of tangentially addressed in the newsletter. So the first is new supply, and this was briefly touched on, but not with much detail. So new supply dropped nearly 40% year over year for the October through March period. So the fourth quarter of last year and the first quarter of this year. That decline was roughly equivalent if you look at just Q1 of this year versus Q1 of last year. So we've seen a substantial decline in new supply. And that's something that's been talked about a lot going back all the way to last year, was this upcoming slowdown finally in deliveries that has materialized. We're sort of in the full swing of that right now. And so that is providing some breathing room for the industry and kind of providing some space for further occupancy recovery that we saw starting to occur last year. That's all positive. I just want to mention one note, which is that the construction pipeline, as ALN is currently tracking it, does look like we're going to see an uptick in 2027 in deliveries. So we're going to see year-over-year declines in 2025 and in 2026, but probably an uptick in 27. And so this decrease in new supply should not be viewed as the spigot is turning off after this flood of units in recent years. It's more like we're getting a brief pause or, a brief slowdown for a couple of years before we may see that activity start to already ramp up next year. So just a note there on the new supply side. And then the main topic of the newsletter really was the slowdown in absorption that we're seeing for older properties. That's sort of partially covered up by the fact that the top line absorption numbers still look quite good, particularly over the last year. If you look at just the 12-month data, it looks quite positive. This doesn't map exactly onto price class, but obviously there is a large overlap between, older price classes and older properties rather, and price class performance. So we didn't really delve into price class in the newsletter, which is why I wanted to mention that here. So if you look at the 12-month absorption picture, it's quite positive, just national absorption over the last 12 months. And it's quite positive across the four price classes. So all four price classes have shown really robust year-over-year gains in absorption over the last 12 months. Now, when you zoom in on the last 6 months, that's where that picture shifts. So Class C over the last 6 months has slightly outperformed the same period a year ago, and Class D has outright underperformed that same period a year ago. Whereas, again, if you zoom back out over that 12-month period, both have outperformed by a pretty good margin. And so we have seen sort of a shift over the last 6 months. If you zoom in even more over the last 3 months, that has continued. And that slowdown in demand and actually outright loss of net leased units for Class D has come alongside, I would say, consistent increases in concession availability. So concession availability was already high for Class C and Class D, whereas Class A and Class B have managed to either stop the proliferation of discounts or, as with Class A, actually start to walk those discounts back. That has not been the case in the workforce housing segment. So we've seen a slowdown in demand in Classes C and D alongside increased lease concessions, which again is something we've not seen over the last couple of years. And so that's why this sort of merits some attention. In 2024 and in 2025, demand trends were positive really across the board. And that was one of the main components of, and that's something we kept pointing out in our blog posts and newsletters, was the fact that demand looked good, not in a concentrated way, but in a widespread way. And that pointed to sort of a positive horizon moving forward. That now over the last 6 months has started to shift, where we are seeing more of a bifurcation. The top of the market is still doing quite well. The workforce housing segment has started to cool on the demand front. So I wanted to draw your attention to that. Other than that, some upcoming events for me that may be relevant to you. I'll be speaking at the South Carolina Annual Conference on May 7th. May 14th, I'll be speaking at the Florida Apartment Association Spring Governance Meetings. I'll be, I think, just moderating a panel, but we'll count that as speaking. So if you're going to be at that event, make sure to come see the star-studded panel that they've put together. May 21st, I'll be speaking for the West Coast chapter of IREM. And June 2nd, I'll be doing a webinar for the Apartment Association of Greater Los Angeles. So find us on social media, your platform of choice, ALN Apartment Data. Other than that, I'll see you next month. Thank you.